Everybody, Matt here from Epic Real Estate, where we show people how to invest in real estate with an emphasis on retiring early. And as crazy as our world's getting right now, today we got a new event to react to and respond to. That early retirement is starting to sound better and better and better, isn't it? So if this is your first time here, by the way, we're going to talk about interest rates, some recent updates based on what I shared with you earlier this week that I think are really, really important to be aware of. I'm going to talk about this inflation and how it impacts real estate and how it's going to impact your investment portfolio. And I'm going to talk about the future of real estate NFTs, non-fungible tokens. And then we'll get into all three of those things and how they impact your real estate, how they impact the housing market, and what there is to potentially do. So if this is your first time here, really glad that you found us. If you like what you hear, make sure you hit the subscribe button before you go. And if this is not your first time here, welcome back. And thank you for sharing this with your friends and family. You're the absolute best for doing that. And I really appreciate that about you. So thanks again. And by the way, if you'd like to get started investing in real estate or start your real estate investing efforts, I put together a free training for you. And I believe I put the link down below in the description. If not, I'll go back and get it. But you can go to matsfreetraining.com, matsfreetraining.com, help you get your first or your next deal, kind of put everything in place for you. And then if you've got a little bit of experience under your belt and you're looking to kind of level up your real estate investing efforts and working with me and my team on a one-on-one basis, if that sounds like something you'd be interested in, go to reiace.com, answer a few questions, then you can pick a time for us to hop on the phone and brainstorm some ideas about what that would look like together. All righty. Hey, Matt, happy Saturday to you. Good to see you, buddy. All right. So let's talk about, before we dive into our subject, I want to do a quick recap of what we talked about just earlier this week and how important this is to keep in mind when it comes to your real estate investing, your investments, your overall portfolio, and your financial future. And so when it comes to the real estate market and how we're going to predict this, it's really just supply and demand. And you've probably heard me say that at least once before, but that's what it is, and supply and demand, it's undefeated. It always wins. And, if we look really quickly at the supply and demand of real estate, the supply being houses, right? We're at an all-time low, certainly not trending in the right direction. Houses are being gobbled up like crazy, and we're not building them fast enough. In fact, this report that I referenced from June last year, the housing shortage is worse than ever and will take a decade of record construction to fix. And they break down the exact numbers. That's actual math. That's not just a random guess. It's going to take a decade. No, it'd take a decade if we were to resume back to 2005 at the rate that we were building property just before the last housing crash, we'd have to maintain that rate for 10 years for us to catch up. So those are real numbers. And the reason being is the confidence wasn't there. I mean, everyone was devastated and destroyed after 2007, 2008, and the builders just stopped building. And so there's a lot of ground there to make up. And even today, although the builder confidence has been rising, it's pulling back a little bit. And the big reason it's pulling back is because of the cost of goods. It's never been more expensive to build a home. The cost of copper has gone up. The cost of cement and concrete, the cost of lumber has gone up. And, builder confidence, did peak a little bit there at the end of last year, but it's pulling back a little bit right now. And the reason is they just can't build houses for cheap enough to sell them for a profit, at least not that middle class house, that first time buyer house, maybe that second time buyer house. So a lot of the building efforts right now are going into luxury properties because there they can actually sell them for an amount where they can actually earn a profit and they can compensate for the extra cost and expenses and goods. So supply is low. It's going to be low for a while. It's going to take at least a decade for us just to bounce back to a normal market. And we still have to pick up the building, the speed of our new construction just to hit that. So it could potentially even be longer before we get there. So the supply is low, and we know when supply is low, what does that do to prices? It certainly supports prices, and it'll probably cause them to go up even more. But there's another part of this equation, and that's demand, okay? So demand, when it comes to real estate, that's who has the demand? People, right? So we look at our population, and you'll hear over and over in the news that the percentage growth, the rate growth by a percentage of our population is getting lower and lower and lower. Hold on. There we go. All right. Those automatic ads just start playing in the background. But if you look at that blue shaded area, that's the actual number of people. And it is growing and growing and growing. You can see the projections there right at the far right between 2020 and 2060. We're not stopping. By 2060, we're going to hit 400 million people. But there's something really unique about the population, and that's where how old they are right now. This demographic between the age of 29 and 39 years old. And that represents the biggest chunk of the millennials, as you can see right here. This yellow section is 82.22 million people. And we are just 2 years away. Like if we looked at this, just right smack in the middle, right where it just left of the tallest hump, that's kind of where we are right now as far as their age. And that's the age of 29 years old. And the first-time homebuyer average age is 31 years old. So we are going to have a massive portion of our population moving through that first-time homebuyer age. So that represents a huge amount of demand. And then once we get through all the millennials, and right behind them, we've got Gen Z, which is an even bigger portion of the population, right? So how is this happening, and how are they able to buy homes? Well, it's happening because the interest rates have made these houses much more affordable. But that could all be changing here very, very soon based on what's going on in the economy. And that's what I really wanted to talk to you today. I just wanted to give a little quick recap to get you on the same page. And thank you, Matt. I am having a great day, sir. Good to see you. What do you got here? You sharing a stat with me too. 1.5 million are being built, most in the past 50 years. Got it. Yeah, if you go back and read that article, it breaks down the actual math, and it is pretty darn interesting. So there's the actual headline if you want to go ahead and take a screenshot like that and go back and read it. But we got a ways to go. The supply is not going to meet the demand for a very long time. And the demand that's demanding the supply is it's already walking the earth. It's not like we're waiting for these people to be born, or we're gambling or betting or anticipating for these people to be born. They're already born. They're already walking the earth. And there's enough demand here to support all of our real estate investments for far long after we're gone. All right. So just based on the supply and demand, I see real estate is the greatest investment there potentially is. If one better comes along, I'll certainly start talking about that, but it hasn't yet. Because when you've got supply and demand in this type of balance, the prices can really only go up. But there is one variable, and that's the interest rates. And then there's another thing to consider that's at the top of the headlines right now, and that's inflation. So I want to talk all about that and some current events that have just happened this week. And I'm not going to do it alone. I brought on a really good friend of mine. I asked him to join us. Good friend of the show, even better friend of mine personally. And so Mr. Jason Hartman from the Creating Wealth podcast. How are you doing, Jason?
Hey, Matt. Good. How are you? Are you hearing this microphone?
Yes, I guess so.
Good.
I can hear you fine.
Coming through. So, yeah, I love what you just said about the demand is already walking the earth. That's a really good way to put it.
Right.
Yeah, good way to put it. But, I got to tell you, I wouldn't stress too much over the increasing interest rates. And one of the reasons is, one of my strategies that I've been teaching for the last 18 years doing this is called the 3 dimensions of real estate. And there's really more than 3 dimensions, but I just call it that because it sounds good.
Yeah. I think you and I both kind of have those little tags we like to put on our lessons. But
yeah, that just makes it easy to remember, right?
For sure.
And
3 dimensions of real estate. What are they?
Yeah, in the 3 dimensions. Oh, wait, let me get on the good. Wasn't on it. There you go. Okay, should be better now. Oh, are you there? Well,
yeah, I'm here. This was your spotlight to go over the 3 dimensions.
Yeah, okay.
I'm playing producer here too, so.
There you go. I get it. It's you're multitasking. With the 3 dimensions of real estate, remember, it's not just about the purchase market. As real estate investors, one of the beautiful opportunities we all have is we can play the market either way. We can adjust our strategy based on what's going on in the world. So the strategy for the last couple of years has been capital gains. It's been awesome, right? Capital gains have been fantastic. But when interest rates increase, it pushes a lot of people out of the home buying market, and they're forced to stay in the renter pool. And so it puts upward pressure on rents. So your strategy then is to just milk it, milk the cow, right? As landlords, investors that own big portfolios, they really actually prefer high interest rates because that makes a barrier to entry for other investors and for new rental supply. So it's really just a matter of adjusting the strategy. That's really the key, is not to think, well, interest rates are high, it's a bad market. That's making the market cool off. But in those markets, a lot of times you see a lot of upward pressure on rent. So if you're a buy and hold cash flow investor, as am I, and I know you are too, I'm not complaining about that.
Right. No, for sure.
Yeah.
And Jason,
very little new supply is added to the market when interest rates are high. Yeah.
So it supports the price is what you're saying.
Right.
Okay. So, you and I, we've been talking about this for a long time. We've been on a really long run. I mean, we're 13, 14 years of really big appreciation.
Yeah. Since coming out of the Great Recession.
Right. Yeah. And the interest rates have dropped and dropped and dropped the whole time. Yep. And so we've talked about this like in theory and we've talked about it hypothetically, and we've talked about like, remember when prices or interest rates were that? But there are some things that are happening currently and just happened this week that I think are certainly worthy of our attention.
Yeah.
In January, they had the Fed meeting and they said they're ready to raise interest rates, likely going to happen in March. And everyone was like, okay, it's probably going to be about 25 basis points is what we're all thinking. And then the strong jobs report came out. And then it was like, okay, now we're probably most definitely going to get a rate hike in March and potentially even more, since the job report was kind of pointing to that the economy could support an even higher interest rate hike, right?
Right.
So we've got, and then we had this come out, inflation that surged at 7.5%. That was just this week.
And that means the real inflation, Matt, is 15%.
Yeah, of course. Yes. We've talked about it so much here, but what's this?
Oh, the CNBC video is playing there.
Yeah, I had a great oh boy. All right. I had it all set up, but it has, I guess, a timer on there to when the commercials are going to play. Anyway, thanks for that. All for the ad dollars, right? Anyway, so we got the inflation surging. So this was something that I just noticed, and this is kind of the reason I wanted to hop on a Saturday and talk about this and I noticed this on Twitter. After the CPI report, there's now an 89% probability of a 50 basis point rate hike in March.
Wow.
Up from 24% yesterday and 7% from a month ago. And so we're certainly going to go up half. And then the traders are leaning towards a half-point Fed hike after the inflation surge. And then what was the other thing? Oh, this was the part that would kind of like, maybe even sooner now. So this expedited procedures closed Fed board meeting scheduled for Monday, February 14th. So that's just 2 days from now to review and determine rates. So potentially there is reason for an emergency and potentially even more. And I lost this article, but it said could be up to a full point by April.
Wow.
And so when we look at that, just like if we're just looking at mortgages, if I just want to say right around the median home price or median mortgage, what we were at 375 now, something like that.
Yeah.
So if we borrowed 300,000 at 4.5, so we have a $1,500 payment. If we, in the next 2 months, if we had that full point, we went up 17 to like $200, right? $200 a month. And a lot of properties are cash flowing like $200, $250 a month right now to buy them. And so that could have some impact on whether you hold or if you decide to panic sell. I mean, what do you think if this were to come to fruition over the next 60 days? What do you think is the best plan of action, Jason?
I think investors should hold and they should wait for the rents to catch up to the prices. You've got to know something throughout history. I've been doing this a long, long time. When I started in real estate, a stamp was 5 cents. You know how old people say that kind of stuff.
Right.
And we walked to school and it was uphill both ways.
Right.
But
in the snow.
You know what always happens is the prices lead and the rents lag. That it always happens that way. The prices of houses, are sensitive to supply and demand as rents are, but they're so sensitive to interest rates. And so when you see those rates very low, there's just going to be a ton of buyer demand when housing affordability is high, and the prices will go up faster and the rents will lag. It always happens that way. Remember, they can raise prices on every sale. On every house that sells in a neighborhood, the price goes up, right? Because the neighbor's always looking in the rearview mirror thinking, I'm going to sell my house. Well, it's certainly better than the other guy's house. It always is, even though it's not. And then they raise the price. But if you've got a 1-year lease, you can only raise the rent once a year. So rents lag, prices lead. Okay, prices lead, rents lag. Just know that. And do you want to comment on that, Matt? Or
I'm sorry, I'm again playing producer back here. So this is from the Apartment Guide in 2021 annual rent report. This is back from June, and year-over-year rent increases, to your point. In Houston, up 24%, Santa Ana 27.3%, Tucson 32%, Jacksonville, Florida 35%, Las Vegas, Nevada 42%. When was the last time we saw rents rise like that?
Yeah, it's just crazy. It really is. It's epic.
It's what?
It's epic.
Right? Yeah. So if we took like that property we just talked about, that $400,000 price, what do you say that rents for? $2,500 a month, probably?
Yeah, ideally, no. I've got a couple, I've been sort of doing a lot of exchanges and trading up to more expensive properties, even though technically they don't perform quite as well. I'm just getting to the point in my life where, I've made a lot of money and I just want like ease of management. So I've been selling some cheaper houses, buying some more expensive ones, which technically from a rent to value ratio perspective are not as good. I'm not saying everybody should do that. They do tend to appreciate a little better, and you sort of have an easier management time because you got better quality tenants usually and all that kind of stuff. So my answer to that is, $420,000 house, you can rent that for $3,300 in a lot of places.
Okay. 3,300. So
yeah, so it's not as bad as the 2,500 you're talking about.
Okay. So if our rent went up $200 and say our mortgage payment went up $200 and then our rent goes up 25% on that 35. So that's like $600 in rent increase then, right?
Well, potentially, it depends where the house is. I mean, everything is different, but
right.
That's why I'm getting 3,300 for $420,000 houses.
Yeah. I know you have
in Florida, by the way. Those are Florida.
For sure. So the rents are rising faster than what they could, even if they raise the mortgage rate a full point. Was the math I was kind of trying to come to a conclusion there on.
Yeah. I'm not totally following your math, but just know that 1% in interest rate in either direction is equal to about 10% in price.
Right.
Rule of thumb, it's very rough, but it's good enough for government work, as they say.
Perfect. So that kind of leads me into where I'm kind of going with, and I'll try and correct my math or clarify it, is that, so if we go up 1% in our mortgage payment, we come down 10% in price. That could be an environment that causes people to be a little concerned, and maybe it's time to sell houses. I mean, that could be like the layman's processing.
For an investor, you mean?
Yes.
Yeah.
Yes. And
that would not be a smart move from.
I don't think so either.
Yeah.
But when people see their prices come down, they go, "Uh-oh, here's the end. Let me get out while the getting's good."
Yep.
And what do you? I already kind of know your answer, but I'm going to ask you anyway.
Yeah.
So why should you hold then? If your price is coming down 10% because the rates went up 1%, why should you hold?
Matt, I am sure you have noticed this with your students over the years. I certainly have with my audience, with my students and my followers. And that is that many people think they're losing when they're actually winning just because they don't know how to do the math right. So, I mean, you've got, there you go with another ad.
Okay, we're just going to shut that window so it doesn't do that again.
There you go.
All right.
It's interruption marketing is what that is. Yeah. But yeah, you've got to understand how to do the math, right? And know that, like, you've got software you use and recommend, so I don't want to step on that, but I like Property Tracker. That's what we use. And with Property Tracker, you can look at that one-page pro forma, and it will show you the overall return on investment. Of course, it will show you a bunch of other metrics too, your cap rate, your cash on cash return, et cetera, et cetera, et cetera, a whole bunch of things. But you've got to look at the overall return on investment, because remember that old acronym. Real estate is IDEAL, IDEAL, income, leverage, equity buildup, appreciation. Where else did we go?
Deductions.
Depreciation. Depreciation. Yeah.
Right.
Depreciation, meaning in a good way from a tax benefit.
Yep.
And so it's the greatest investment because it's a multi-dimensional asset class. And people tend to just look at, oh my gosh, I'm paying this much in mortgage, principal, interest, taxes, and insurance, and I've got that much income. This deal sucks. Why am I? And now the tenant's calling me saying the garbage disposal is broken. Why am I messing around with this? I make $200,000 a year at my job. That's what they'll say, right? And they don't know how to do the math right. And then here's what happens with a lot of those people. I convince them, just hang on to the property. And then several months go by, they go meet with their CPA to do their taxes, and they're like, wow, this is fantastic.
Right.
And they haven't even considered leverage and all of the other multidimensional things we mentioned. Okay. Just adding tax benefits only. So it is the most historically proven asset class in the entire world.
For sure. So let's talk about this other part and kind of transition to that. Another reason to potentially hold real estate. And we saw if we looked, we saw the Dow went down yesterday pretty steep on this little threat of this emergency meeing, I think.
Yep.
The NASDAQ.
Well, don't forget the looming war. Okay.
Correct.
That's pretty significant too.
Well, I closed that window too. I didn't think we were going to talk about that, but since you brought it up, it actually shows how the stock market really reacts positively to wartime. It was a really good article.
Well, the military industrial complex is publicly traded most of the time.
Right. So we had that. And then I ran across this video this morning. It was an interview with Mr. Mark Cuban, and they were talking about Bitcoin. Yep. But something really interesting came up, and they were talking about Bitcoin being a hedge against inflation. I'll just kind of play a little clip of this of what Cuban was saying.
Matt, can you put your microphone up to your speaker? It's not coming through your sound.
Oh, that doesn't come through?
No, just put your microphone close to your laptop.
Got it.
That'll work. And just back it up a little bit so we can hear that.
You could hear that ad, but you can't hear this, huh?
Yeah.
All right, let's try this now.
That's supply and demand is undefeated, right? As long as you get more demand and less supply, the price is going to go up. But look at gold, right? They talk about gold as a hedge to inflation. Gold's not a hedge to inflation. Gold isn't a hedge to anything.
So I
agree with that.
Did you hear that?
Yeah.
And that's kind of like the time-honored wisdom is that, you either go to gold or you go to real estate, and to protect yourself in a high inflationary environment.
Right.
And, if we look at what the actual gold price did on Friday, it came crashing down.
Yeah. And
kind of just to his point that, we're kind of left with just real estate, aren't we?
Probably. I mean, look, the cryptocurrencies are volatile. They're going to do their thing. And, it's a question of, is it short-term or long-term, right? How is it reacting? Gold doesn't produce income. It doesn't have tax benefits. In fact, it has terrible tax treatment because the tax is a collectible, 28%. Okay. No 1031 exchange, income property is just such a better asset class. Now, I know, occasionally people hit home runs in the crypto world, but it's highly speculative. You can hit a home run on a startup company too. But again, if you want something that's a conservative asset class that everybody in the world needs, I mean, 3 common needs for every human: food, clothing, and shelter, right? Let them rent the shelter from you.
Yep. And earlier in that interview, Mark had actually talked about where Bitcoin gets its value and where gold gets its value, and he talked about supply and demand, what I kind of opened up with, and he says supply and demand is undefeated.
Yeah.
And until a roof over our head goes out of fashion, the demand is going to be there, right?
Yeah, I agree. And Matt, I got a couple slides for your audience if you want me to share my screen.
Oh yeah, please go for it.
And these are fresh. Your group is the first one to see them because
nice.
Except for two of these slides, I made them this morning.
Okay. Yeah. Good. You always come with treats. I like it.
Yeah. Can how do I share the screen though? Is the question.
Let me stop sharing mine.
Okay, there we go. I can do it. Yeah.
Okay, cool.
All right. Do you see it? Do you see my screen?
I do not. No.
Okay, wait. Oh, wait. You were probably sharing. Okay, here we go. Okay, now do you see it? No, unable to share screen. Please update permissions. Okay. I can do that pretty quick here.
All right. Let me go to this other thing really quickly. And this is on a different type of subject, but this also happened this week. And I'm going to have to, where'd it go? I'll have to pull this up because this was the one page that kept on starting the ads. But it was the real estate sale on an NFT in Florida. Did you see that?
I did not. Tell me about it.
No. Okay. Very good. So where did I have had the news here? Is this it? There it is. So Gulfport home becomes first successfully sold as an NFT in the United States. So the U.S. sold for the house sold for $209 Ethereum, which is the equivalent to 631,000. So how they did it was, I mean, the big question was, how do you sell a physical asset as an NFT? And what they actually did is the house was owned by an LLC, and they turned the LLC into digital paperwork. And then by buying the NFT, you actually ended up owning the house.
Okay, so what's the point of that? I mean,
I don't know, other than where it said right down here, you can verify ownership on a digital item. Despite growing popularity and certain home. There it is. Heckler previously said the benefit of selling a home as an NFT is it allows for a much faster process of transferring ownership to the buyer.
Okay, yeah. So the escrow process and tracking title, there's been a lot of talk about blockchain applications for that. But I'll tell you, before everybody thinks the US has such an archaic system, right? Look around the world. The US system is pretty transparent. It's pretty quick compared to trading property in Latin America, Europe, a whole bunch. I don't know about Asia offhand, but yeah, it's not that bad. So that's interesting. You know, I wonder if a lender would finance that. Probably not yet, but maybe someday. We'll see.
Do you think that's a novelty though, or do you think that's where the future is going?
You know, we're definitely going to have some very nice blockchain applications that are just going to change our life in so many ways. Now, an NFT is an add-on to that. That's a non-fungible token. And, you know, most NFT sales have just been really kind of a crock to me because it's like this fake scarcity that isn't really scarce. You know, a JPEG sells for millions of dollars. I mean, I don't know.
Well, here's another, you know, I've been following Gary V, and he's been selling his little JPEGs, right? Yeah. But they actually have a utility attached to it where you have access to certain courses, and then you have access to him personally.
But you could buy that on his coaching program too, probably, right? Or his mastermind group.
Okay, so all right, so here's another use case that I just heard is happening. Ferraris, the car. If you buy the car, you actually get an NFT of the car as well, and you could drive the car around in the metaverse. And I just went to an event here in Vegas. It was about 2 months ago, and Raul Paul, do you know him?
Yeah.
Okay.
Sure. Yep.
And he presented a scenario to where that NFT Ferrari could potentially appreciate to more than the actual car itself.
Why?
Yes.
Just because a bunch of speculators are buying fake real estate that's digital in the metaverse. Try living in it. I mean, I don't know.
You're playing a Grandpa Hartman right now.
I am playing Grandpa Hartman. I mean, listen, I own Bitcoin. I bought some Hex the other day too, so I would love nothing more than to be wrong about crypto. I want it to take over the world, a decentralized money that is controlled by the people and not some evil, crooked central banking system. I think that's awesome. But NFTs are part of that. Real estate in the metaverse, really?
I know. Yes, really, Jason. Yes, really.
I know. I did a show on it. I had an expert on my show talking about it. I'm still skeptical.
The currency is here. That's done. I think that's established, and that's only going forward. Well, the NFTs is like the newer thing in the last, couple years. And, millions and millions of dollars are being spent on it by major brands, Coke and Pepsi and Nike. And, you will see a company like Facebook actually change their name to Meta.
Facebook is running away from its terrible reputation because, Zuckerberg is he's committed all kinds of crimes against humanity. These big companies throwing their money around. Look, remember something. It's not their money. It's their shareholders' money.
Okay.
I mean, I don't know.
But they got to answer to their shareholders, though, Jason.
Yeah, fair enough. But we'll see what comes of it.
We will see.
I don't know. I mean, how can the Ferrari in the metaverse appreciate faster than the real Ferrari? I'd love to hear that whole argument from Raoul Paul. I mean, what is it other than speculators?
Well, it's because they're looking at a world that doesn't really exist yet, right? They're looking at the potential.
Yep.
And when I was in the music business and the digital download thing, the Napster thing came along, and it killed our sales almost overnight. I mean, we could watch it in a few months. It was like we went from exporting boxes and boxes and boxes as compact discs,
right,
and to not.
Yeah.
And I was like, what happened? And all of the people are just accessing our music on Napster for free.
Right. Yeah.
And I was thinking, like, that's never going to get a hold. The authorities are going to come in, they're going to squash it, and everyone's going to go back to buying CDs. I mean, who doesn't want to walk into a music store and read through the compact liner notes and smell the vinyl? Like,
well, Apple changed it all.
Yeah, no one's ever going to give up that experience. And here we are. There's essentially that business, a part of the music business doesn't exist anymore. And I'm sharing that story with you as I was in this country western bar in the MGM Grand, and I was sitting next to a cowboy. He was visiting from Texas, and I was explaining this to him, and he kind of had the same response as you, like, this metaverse and this crypto is so stupid. Da, da, da.
So you think the cowboy's a redneck and I'm a grandpa?
Yes. No, here's my point. I'm gonna come full circle right now.
All right.
Is that I had these thoughts that you're having right now about the metaverse. I had this about the digital download, and it kicked my ass.
I know, but the digital download,
I had to start life completely over from scratch. I was bankrupt. I was divorced. It was terrible.
I get it, but the music thing is a completely different story. Music is something we all love to listen to, and listening to it and hearing it is it doesn't have to exist in physical form to enjoy it. Okay, the NFT is not scarce in real life. They're just making fake scarcity out of putting it on the blockchain and sticking your name attached to it. That's all they're doing, really. Okay.
All right.
Now I admit, listen, Pompliano, he's a big crypto guy, right?
Yep.
And I was with him at a conference just about 2 months ago, and he wrote a newsletter saying that he changed his mind on NFTs. Okay. And I respect him because that guy really knows his stuff. Okay. And he talked about how when you buy an NFT of, say, tomorrow's the Super Bowl, so a Super Bowl player or a team or something, right? They send you a physical thing. A lot of times it's like that lucite sculpture behind me, okay? And here, I'll change the color for you. There. so you know what I'm talking about. And that is a lot of times how an NFT comes. And it's connected to the internet. You plug it in. It's got a USB plug and it's internet connected. You hook it up on your Wi-Fi. So when a touchdown is scored at the Super Bowl, that can actually change in your house. Now, that doesn't have to be an NFT to do that. Okay. That's just tech. all right, and a connected world and the Internet of Things. But that's interesting, right? I think the NFT itself component is being massively overplayed and it's overrated. But I do think that all of these add-ons that they're adding on to the NFT, like you said with Gary Vee, access to him, whatever, right? That's really the value, okay, in most cases. And, all kinds of things are going to be NFTs. I was debating this with someone on Facebook just this morning. I posted fake scarcity, and he said, and he came in and said, well, in a few years your airline ticket's going to be an NFT. And I said, sure, but my airline ticket's not going to be $72 million. Okay. NFTs will have all kinds of good commercial applications, concert tickets, airline tickets, anything that needs to be scarce. Okay. One copy of it. That's great. But, I don't know. When someone's paying, millions of dollars for a JPEG, I think they're crazy. So,
right. I mean, yeah. I mean, there's different applications that are going on right now, and probably the ones that are getting all the headlines are the crazy ones.
Yeah.
Right.
Yeah,
or else
fair enough.
They're worthy of headlines.
Yep.
But there's other stuff that I'm just kind of seeing, and I could see this with the real estate too. For example, if you took that Gary Vee NFT and I sold it to you, Jason, right? There's a royalty that's paid out to me when you go and get access.
That's
right?
Brilliant. That's the artist can get paid forever. Yeah.
So what if these NFTs found their way into real estate where you essentially own a piece of that house forever?
Yep. Yeah. No, that's cool. But the house is real. It's not a JPEG.
Right. But the application for the NFT though.
The application is legit. I think it's great.
Totally.
Absolutely.
Okay. Anyway, I'm just saying I'm not going to snub my nose at a new technology like I did last time. Whether this takes off or not, I don't know, but I'm not going to be left behind because it took me.
FOMO really hurts.
Especially when you miss out.
Yeah, well, that's what it is.
It's even worse because you're like, I knew I should have gone for it.
Exactly. You got it.
Right.
Hey, I think my screen share is working.
Yeah, it looks like it.
Put it up
you
there.
Ready? Here.
Yeah. So, Matt, last time we talked, I believe I shared this one with you that I predict this year we'll see 12% housing price appreciation. And
that's this year.
Yep, this year, and 8% rent appreciation. And so here's a common question I often get. Here's the new slides I talked about, okay? Is, what gives? How are people going to be able to afford this? And it's funny how the human mind is. People sort of, I think just for cognitive efficiency, make these kind of generalized kind of half-baked statements. I do this too. Okay. I'm a person too. So I'm guilty as charged, just like hopefully everybody listening. And, if you look at neuroscientists and stuff like that, they'll tell you that the highest energy using component in our body is our brain. Our brain actually takes about 20 watts of power. So it takes a lot of power to run your brain, right? And so we're conditioned to be stingy with that mental energy, okay? And so I think this is the reason people have these blind spots to this issue of, if they say things like, well, if housing prices go up any more than they already are, nobody's going to be able to afford a house. And if rents go up, how are my tenants possibly going to pay? If they're paying $2,000 a month, how are they going to pay $2,160? That's just no way. No one's going to be able to afford to pay the rent. Not the issue. Let's reframe the issue to the correct issue here. So they say, what gives, right? And I'll tell you what gives. Standard of living gives, and quality of life gives. Meaning people are going to lower their standard of living and give up the quality of life they have for a lower quality of life. This is not good news, okay? For renters, definitely, and for people who haven't purchased real estate yet, all right? So here's the example I want to share with you. And I got this off Zillow just this morning, okay? So in Jacksonville, if you want to spend $1 million in Jacksonville, Florida, you can buy this house. It's available now. It's almost 5,000 square feet. And take a look at some of the pictures. looks pretty nice to me. It's an older style house, but I mean, it's a neat house. Look, it's on this nice big lot. It's got over a half acre of land. It's big, beautiful windows. I mean, this looks like a pretty great house for $1 million, right? Jacksonville is a bargain real estate market. But if you move to New York City, you can get this place for $1 million too. 653 square feet. And it's a little condo. And I don't even know what the condo dues are. I should have checked that, actually. And don't worry, you'll have this beautiful view. Probably one person could fit on the little balcony. And you got this cheesy little kitchen that looks like the kitchen in my old motorhome or my old yacht, right? It's that's the difference. So that's what gives. The standard of living declines. In the future, if you talk to one of your tenants today and you look around and say you knock on their door and you look at the house you own, but they rent from you, you're going to note what their standard of living is. But in 5 years, if that person doesn't do something to hedge against inflation, if they don't buy investment real estate, or at least buy a home in which to live, or maybe gold or cryptocurrencies, I don't know, we don't think so. Their standard of living is going to go down. In the Jacksonville house, the master bathroom suite is as big as the New York City condo. And guess what? Thomas Friedman wrote this book a long time ago called The World is Flat. And this book is pretty boring, honestly, but the concept is good. And I definitely have my disagreements with Thomas Friedman, but the concept of the world is flat has been even flattened more since the pandemic, because now people are leaving cities, they're moving to suburban and rural markets, and their standard of living is increasing. They're going from New York City to Jacksonville, for example, and their standard of living has massively increased. And they can do that with a telecommunications technology. And now pretty much every employer on earth has accepted the idea of remote working. And a lot of people have started their own businesses, so they're location independent. One of the quotes I had a long time ago relates to this. Everybody knows the 3 rules of real estate probably. Location, location, and location.
Right.
And these rules, Matt, have been true since the beginning of time. When we were living in caves, it mattered if your cave offered protection from wild animals. It mattered if your cave was close to water and berries and hunting opportunities. That mattered. And this mattered into the industrial era, when we needed to live in cities where the factories were, and into the information age, before the information became really portable. Right here on this iPhone, for example, right? With that super cute dog. Look at that dog. Yeah. So it has changed. And about 2011 or so, I started saying this a lot. Geography is less meaningful than it's ever been in world history. Now, location still matters, but less than ever. So people can live where they want. And that's why the game has changed. And the quality of life will decline for people who don't hedge against inflation, which I know is the topic of our talk today. So I just wanted to share that. And you can turn off here if you want, sure. Because I think that's important to understand. People are moving to quality of life areas, and if they don't hedge and solve the inflation problem, which I think is the business plan for the government going forward, I don't think there's anywhere close to the political will to solve the problem, which would usually mean what Paul Volcker did in the early 80s, raising interest rates to an extremely high level to cool the economy, to just put out the fire. And Paul Volcker did that. The last time that was done was in the 80s, and it was tough medicine. Mm-hmm. And I don't think we could do it today, because we're starting at a much lower point. So look at it like this. The Federal Reserve has used all their bullets in the gun. Yep. And they've got to raise interest rates in order to reload. But it's very hard to do that when, the economy is in this precarious of a situation. And I know Jerome Powell will tell you it's not, because his speech, like last Friday, I think it was, he said, the economy, the jobs report is really good. Everything's looking very good. The economy's booming. Now we need to change our policy. And that change, I don't know. I don't think they can change it much.
Even if he got aggressive with it,
Yeah.
would that fix it?
Well, I mean, look, when you have the stated rate of inflation at 7.5%, and you have mortgage rates at 3.25% approximately for owner-occupied homes, you got to do a lot of jumping in interest rates, or in interest rates to cool that inflation. I mean, normally the rate of inflation is higher than the mortgage rate. It's certainly higher than the real mortgage rate, okay, or the real inflation rate, right?
Right.
Sorry, is that the other way around? The real inflation rate's about 15%, if you ask me. So you're literally getting paid almost 12% to borrow on a mortgage now. Even if you never rent the house out, you're getting paid to borrow the money.
Yep.
So they would have to hike rates very substantially, much more than the numbers you were mentioning earlier. In order to really cool the inflation problem and get that inflation genie, if you will, back in the bottle.
Is it possible at this point, though? I mean, what are your thoughts? You and I have
never I don't think so. No,
the reset.
Yeah,
I don't think so either.
I think inflation has to be the business plan, and that should be the business plan for us individually. And it's, I think, by default, whether by choice or default, the business plan of central banks and governments around the world. So own real estate.
Own real estate.
Own income property specifically, not just your own home, right? But own income producing real estate.
Perfect. Well, that'd be a good spot to leave right there on this fine Saturday afternoon.
All right, buddy. Well, good talking to you. And
appreciate you.
I want to wish you and your audience happy investing. And you know where to get me, jasonhartman.com, if you need anything, podcast, YouTube, whatever.
Awesome. Thanks, Jason. Appreciate you, buddy.
All right, buddy. See you later. Bye-bye.
All right. Bye-bye. Okay. And so that wraps up the show. And if you found this episode valuable, who else do you know that might too? There's a really good chance that you do know somebody else that would. And when their name comes to mind, please share it with them and ask them to click the subscribe button when they get here, and I'll take great care of them. All righty. God loves you, and so do I. Health, peace, blessings, and success to you. I'm Matt Terrio here at Epic Real Estate.